Well, it looks like it may be official. It looks like we may be in the worst real estate market in 25 years, on record possibly, or on certain records. I'll tell you more about that here in a little bit, because I've heard it said now that this may be the slowest, the absolute slowest real estate market in 25 years or more. That being said, the numbers are reflecting that. I'm seeing it. I'm feeling it. And that puts me in a bit of a weird spot because, I mean, I've only been licensed in real estate for maybe 16, 17 years now. So this may be the slowest market that I've ever seen. And I came up through the great financial crisis. Like I was aware of what a bad market was. Maybe I was too naive to know what a bad market was back then. So I'm going to share with you, the numbers. We're going to go over them. I'm going to show you just what is going on out there in the market, how bad it is if you're a seller, how good it is if you're a buyer. And I got some other topics to discuss here. Welcome. I will not be doing this. Usually I try and do these Friday afternoons. I will not be, because here, if you're an agent at my Macdonald Realty office, South Surrey, if you want to come check out our new office because you're thinking about switching things up, maybe you need a fresh start, new office, or if you're a new agent, come check it out. We'll be here tomorrow afternoon, starting at 4 o'clock. I wish it was open to the public, guys, but sorry, it's not. My clients, if you want to come, you can come on in, connect with me, shoot me an email. We can get you in, but not open to the public. Open to the public for realtors because, hey, Macdonald Realty, that's what they're in the business of, right? Realtors. So enough about that. Let's talk a little bit about what's going on in the market, please. If you have questions, please leave them in the chat. I would love for you to click the like button, leave questions in the chat. If you're watching on replay, I will try and get back to all of your comments in the replay as well. And we'll get to the Q&A here very shortly. And hopefully I can answer any questions you might have. The stats are out for the entire Fraser Valley and into Vancouver as well. Chilliwack stats suck. Remember that. So I can show you those if you have questions about your particular market. But what's the first thing I want to talk about in this terrible, terrible market? I was thinking about doing a video on this, but I don't really know a way or an angle to take it. So I'm just going to maybe do a little bit of a rant here and just say, I am noticing a trend because of how slow the market is. And that particular trend is that agents are working with extremely unqualified buyers. And that is extremely frustrating if you're a seller who, let's say, for instance, you've been on the market for 30 days, you've been on the market for 60 days, 90 days, you finally get an offer, you accept that offer, you negotiate it, you do all of those things. And then you find out 7 business days later, 10 business days later, that the buyer had no qualifications in mortgages whatsoever. And they never should have written that offer in the first place. And they've just tied you up in a time of which is already extremely frustrating. We're seeing this happen quite a bit now. So I crunched the numbers for my team the other day. And I didn't do the number of deals we have. It was a factor. But what I looked at was the number of accepted offers we had this year. And what I found was 20% of those, 1 in every 5 accepted offers, has fallen apart for one reason or another. Generally speaking, we're finding that those offers are falling apart because of buyer financing, because the buyers are not qualified. And why are the buyers not qualified? I think it's because the agents are so slow in their business that they're just willing to do whatever it takes to get out there, get you excited about a property. You want to buy a property? Sure, let's go see them today. Let's not worry about your pre-qualification. We'll worry about that later on. So I think you're dealing with underqualified agents or untrained agents working with completely unqualified buyers. And unfortunately, we've had a number of collapses this year. One of those collapses we've had was our buyer. They found a property. We were doing our due diligence on the property. We found out that the building was no good. And then what happened? Well, we walked away because the building's no good. We don't want you to buy a building that's no good. But like 8 times, 9 times, 10 times that amount of our listings when we've had accepted offers, the buyer ends up walking away. and they walk away almost every single time because of financing. Not every time, but almost every single time. So that shows me that the buyers that are writing offers in a lot of situations right now are definitely underqualified, or the agents don't have the skills to get them qualified to find out if they should be even showing them in the first place. And likely that's coming from a space of way less sales. So the agents are just willing to do whatever it takes to try and, throw enough spaghetti at the wall. Hopefully something sticks. And I'm going to show you what those numbers look like here so you can see exactly how slow it is. Because I searched for some numbers the other day, and I looked at numbers in a little different way. I'm going to show you what that is. And then it was very evident how slow the market is. But it's not just in the straight numbers. You got to kind of dig into them a little bit. So I'm going to show you how I did that here coming up. I remind you, it says here currently 21 people here, not a single comment yet. So even if you don't like me, make a funny comment about my mustache or something like that. And just help that chat, please. And click the like button. I should see a heart or two. The hearts going up the screen really make me feel good. I will say, though, before I hop into these numbers and show you exactly what I mean by how slow the market is, eternal optimist on the inside, not on the outside. I don't show it on my face. Here's the deal. I have noticed that of the deals, the ones that came together, the ones that we're writing for our buyers, and the ones that we're accepting, the majority of them have been for condo investors. And I did not see that coming. I didn't see that coming at all. The first-time buyer has actually backed off for us. The beginning of this year was first-time buyer heavy. Investors are actually the ones starting to come out of the woodwork. The person looking for that condo. Now, that small condo, studio condo, one-bedroom condo, two-bedroom condo, those are our working offers right now. Did I lose a bet? No, I didn't lose a bet. Well, I lose a lot of bets, but not this time. We are seeing those condo investors starting to come back. That's a result of, obviously, interest rates have come down. It's a result of there being a lot to pick from. But here's what they're doing. Don't get it twisted. They're picking off the lowest priced listings first. If you see 9 listings available in one complex, and let's say 5 of them are one bedrooms, and the spread in price is $50,000 from $450 to $550, it's the $450 that's getting the offer, and it's not at $450. That's what's really going on out there. So, but when investors start sniffing around, and it's not like it's one investor we have, like with whatever it is, 4 or 5 active deals right now that we have going on. They're all of the buyers, our buyers or not our buyers, all of the buyers involved in those transactions are condo investors. We got a couple of comments. Underqualified, another take. The market has gone so out of whack, people can't afford anything anymore. No, I don't agree. Because when I work with a buyer, they are qualified, and with my mortgage broker, their mortgage broker, that's one of the terms we use. You either connect us with your mortgage broker, or you use one of the ones that we recommend, so we know that it's good. Like, we're your team, right? We're working with your mortgage broker to get this whole thing together. And we can find people that can afford lots. The reason they don't want to do anything is because the market's going down, and everybody thinks, well, I'm not going to buy in a market going down. I'm going to somehow try and wait for the market to be good while I'm overbidding for properties, and then somehow I'll get a better deal because the market is good. Stupid thought, but it is the way it is. So I don't agree with that. What I do notice is when the market does get tough, in one way, all of the people that shouldn't be doing anything try to do something. In a busy market, they don't stand a chance. But in a really crappy market, the people that have no business buying real estate, and it's not like they're just, they're missing because it's unaffordable or whatever, but the people with terrible credit, the people that want to try and do rent-to-own garbage scams, the people that want to do all this weird stuff, become an investor when you have no business being an investor, those are the people that come out in a market like this. Because they're uneducated, they don't know finances, so they think they maybe stand a chance. They don't stand a chance. Okay, so let me get into this here. I do see some comments. Thank you. Hopefully lots of clicks of the like button. And let me show you why it is so slow. These are the most recent terrible numbers from the Fraser Valley Real Estate Board. Sales year to date, new listings year to date. Now, if you didn't know, 2024 was a very below average year. Now, below average, I mean, we had some, when they talk about 10-year floating average, well, 2020, 2021, 2022 were crazy. So they're bringing that up for sure. So it's skewed. I'd like to remove those just as much as I'd like to remove some other negative years that go in the other way, like 2019. Those weren't really like when you look at average, they weren't average years. They were crazy up, crazy down, crazy up, crazy down. But this is 18.4% off of below average. Like, that's not a lot of sales. There is 8,289 sales as of the end of last month. And there are 5,200 agents in the Fraser Valley. So there, what is that? 16,500 opportunities there. That's not enough for each agent to sell 3 homes. And there's another 20,000, 17, 20,000, whatever it is, agents in Vancouver that work in the Fraser Valley as well. Vancouver agents do usually 30% of Vancouver's work. We go the other way too, but anyway. Man, I got itchy nose. I swear I'm not picking. It was a scratch. It was a Seinfeld reference. Did you know that? So it's really that low. And of course, listings are up over last year, which is really kind of crazy as well. However, I had this thought, and this was definitely a realtor thing the other day. I know my managing broker kind of said it as well. There's a whole lot of people that are on the market out there that aren't really on the market out there. And let me explain to you what I mean by that. There's a bunch of people that bought at the peak of the market and they're trying to sell now, and they financially cannot sell for the amount of market value right now. They just can't do it. So are they really on the market? I don't know. I don't think so. There's also something like a third to 40% of homes of where maybe they're boomers, maybe they're, who knows, rich people, whatever, but they have no mortgages at all. So those people, if they ask too much money, they don't really care. There's not a lot of pressure for them to sell. So are they really on the market at all? Excuse me. I don't think so. So, how much inventory out there is actually saleable? How much inventory out there is actually getting showings right now? Like we have, I think, something like 9 listings on the market right now, and it's 1 to 2 showings per week per listing. Some listings are getting no showings. Those are the overpriced ones. But even the ones that are selling, like they're getting 1 to 2 showings per week, and then they're selling. But some are getting 1 to 2 listings per week, not selling. Gone definitely are the days where it's like line up out the door, 25 groups, 20 showings, anything like that. Like that's all gone. I was talking to a client today. We're bringing their property on the market, and they're like, well, we were going to be out of the house for the first weekend. I'm like, you don't need to do that anymore. Like the open house is going to have 3, 4, 5, 6 people at it if you're lucky. And then the showings, you're probably not getting more than 5 or 6 showings, even if you're priced well, because the market's slow. We got some comments. I'm going to get to those. Leave your comments in, please. I would absolutely love to see more comments, but that's what I'm seeing out there. I'm seeing these numbers here. We are almost 20% slower than a below average year. And I think it was Brendan Ogmanson said something like, this is the worst real estate market in 25 years. And I'm going to break down why I do not disagree with him. Let's kind of scroll out a little bit. Emojis are coming in. I love that. I'll get to those here shortly. Let's just take a look here at the overall marketplace. So August had 931 sales. July had 1,200. Sure didn't feel like, I guess it did feel like that. Last August, definitely better. So sales are down. New listings are about the same year over year. Active listings are obviously up, right? So if you have a minus 12 in sales and your overall active listings are up 20%, it's a continuing slow market, and that's going to do only one thing: drive prices down. That's the way it goes. Okay, I'm going to get to some questions here, and then I'm going to come back and show you what I discovered when I was crunching the numbers. What do we got here? Did I lose a bet? No. Okay, so let's go back to the beginning. People just can't afford anything anymore. I do not agree. There are always people that can't afford things. Did you lose a bet? No, I just thought I would grow a mustache. It is terrible. My wife hates it. It's okay. Looks cool. Is scratchy. I don't know how people eat with these things. Like my cereal and milk and stuff in the morning is just... I own an investment condo in Poco, purchased in 2020 or in 2015. Should I sell? Well, that is a very interesting question. I don't know. Do you want to sell? Should you sell? Why would you sell? Do you want the money out? If you want the money out, you should sell. If you don't want the money out, don't sell. Man, why is my nose so itchy? Should I sell is always the question. Should you sell? If you want to sell in the next 2 years, I think you should probably sell sooner the better, because I don't see the market prices being higher at that time over the next little bit. I think every time I've sold real estate, I was just thinking about this today. I used to own in a complex, and the client actually just sent me, who owns in the same complex still, just sent me a roof assessment. So they're starting to get assessed for roofs in the whole complex. Real pain in the butt for them. I used to own in there. It was an investment property. And at the time I was happy. I was worried about assessments coming in the future. I bought that place for it was I don't want to say slum, but it was a low priced, affordable housing unit for short sale 135, back in the day, 13, 14 years ago. I sold it 5 or 6 years later, and we sold it for $280. So I was super stoked about it. I doubled the money basically. And right now they're worth $500 plus. So should I have eaten a special assessment for $12,000 and kept it for another 5 to 10 years? I should have, but I didn't. So hold your properties unless you need the money out, unless you're desperate to sell, or unless you hate being a landlord. Hold on to your properties. 43 people here, according to my whatever this is called, YouTube studio. So how many likes, though? I don't see any likes. Doesn't even show me how many likes. I can't see how many likes. Oh, well. Maybe hearts will float up or something like that. Okay, sorry. Let me get back to these. Is the market going to recover? Absolutely. When? I don't know. That's how it works. We don't know. The market always recovers. If you think house prices are going down forever, there is the only thing that I see actually causing house prices to go down forever will be the decline of population, which could be a thing. I'm just talking overall forever, but that's, humanity. Do you think reduction in interest rates will cause the market to become hot again? Mohammed, I don't think you watched one of my last videos where I said, don't think that September 17th next week is going to do a darn thing for anything, because a quarter point, we've already had 9 quarter point decreases, or 7 decreases for the total of 9 quarter points. What's the 10th going to do? Nothing. But if you do enough of them for so long, eventually the economy will recover. Things will get better. Dumb Money is here. I missed you. Sorry. He says goat. You really make me blush, Dumb Money. Erica gives some munchy face alligator people. I don't know what that means. What about home construction costs? Will it also come down if real estate activity slows down? Home construction cost, I'm not seeing. My contractors are more available. They're not cheaper. So I don't know. Cost of land comes down, then home construction cost, I guess, will get, well, that's not construction cost, that's land acquisition cost. It will get less. So maybe, but I think you're in for it for the long term. Okay, I'm going to leave that for a little bit. I'm going to come back to Q&A here in a bit, because I want to show you a few more things. I'm going to hop down and show you Surrey combined, because I have not done a Surrey report video in a long, long time, and Surrey is my hometown. It's where I am now, and I want to cover sort of what's going on here. So The detached market sales are down 22% year over year, down 17% month over month. It's not that many. It's only 130, but it should hopefully be a heck of a lot more than that. Benchmark pricing and average pricing. So average pricing is down 11% year over year, from 1.77 to 1.57, so $200,000 decline. I'm not seeing that. I am seeing this. I am seeing a lot of this. Like $100,000 down, I am seeing 200. I think that's just as a result of averages. Moving over into townhouses. Townhouses were doing good. I think they're starting to struggle a little bit more now. I've seen some evaluations that have started to turn on townhouses when they were doing so well for so long. Not down that much, however. Only 1% in average price, 5%. Isn't that funny how you have like benchmark price drops a ton in townhouses, which is what it feels like. Like it feels like I've just seen the recent downturn. And then the big downturn was average price in detached homes. And I don't feel like, so it's weird just to see those against each other. And then condos, only 125 condos sold in the city of Surrey last month. That's down. That's a very small number. And this is actually going to be very relevant to how slow the market is because, really what's gone on is we've seen such a shift from detached home ownership, which you would expect because there's just less of them. They're tearing them down. They're building condos or building townhouses, and they're going the other way. So when you look at the market, you know what? I'm not going to hold off anymore. Keep your questions going in, and I'm going to show you something that I discovered. Maybe it's just hype. Maybe it's just me trying to make a good YouTube video. So this is the number of sales since 2000. So StatCenter is one of the tracking methods we use here at the Fraser Valley board. Vancouver board uses it as well. And it shows us a whole bunch of great stuff. Like, here's HPI over the time. This is the number of sales. So this is what I mean when I mean the market's as bad or as slow as we've seen in 25 years. Sales are down. But then you're like, okay, well, it doesn't look that bad. Like they always go up and down every single year. Like this is a year, right? December's always the lowest. And then it goes back up and it's sometime in the summer is the highest, or March or April or May. And then it just does that. And then sure, these are down, and they're down a lot in, the spring months, but they're not down really that bad in the rest of the month. So is it really that bad? Well, this is just a month to month basis. So this is detached and townhouses and condos. Then I like to go here to 12 months rolling because the market is not a month to month thing. The market does not move. July was great. June was terrible. Like it doesn't do that. The market rolls with time. So what 12 months rolling is it takes the average of the previous 12 months, it averages those to the next month, it drops off the next month, and so it rolls that way. To me, it gives you, when I look then at sales, not at prices, but then when I look at sales, it shows you how active the market actually was on a much more rational basis going, okay, it's not just one month had a good month and the other month, lockdown happened, so something went weird. So you're starting to see, we're still in this basis, we're not as bad as after the great financial crisis, right? We're just not. We're still not that bad. And then this was craziness. Like this is real. This is May 2020, which is absolutely true, up through the summer and then into 2022, right there. And then just a fall off and not much since. But watch this. Let's go back to monthly. Now I just want to look at detached houses. You're like, yeah, same thing. Not so bad. Like it's low, but it's not that low, right? Like there's some spikes. 2016, by the way, way crazier in my market at the peak than 2021 ever was. just so you know. 2022 would have been crazier. This month here, March, would have been crazier, except for the fact that there wasn't no inventory on the market. Otherwise, everybody would have kept buying everything if there was just more homes available. So that's number of sales. But let's now go rolling. So this is detached, historical, over the last 20 years, 12-month averages. And man, it's low. It is low. If you look at just detached, remember 2008, it was much more common that people would be in detached homes, even sometimes as their first time buyer, right? Well, back then the low was 5,100 on average. Now we're seeing 4,100. So we're 20% lower in detached home sales, annualized, or I guess rolling average, than we were after the Great Financial Crisis. And 2016 was a way crazier market than 2021. So that gives you a little bit of perspective. Not necessarily the most positive. Not the most wonderful news if you have a detached home, that's for sure. As soon as you add, of course, we just did it, but as soon as you add condos and townhouses, because there's more of them now, that number doesn't look so bad because people are being forced into condos and townhouses, and that's just what happens in our market when you go from, a small little town of 500,000 people or less to now, I mean, they say we're 680. Been to Surrey lately? Tell you what, we're a whole lot more than 680. So, yeah, let's get back to the Q&A. Quick like button clicks, please. Appreciate it. How many people are here? Mine thing says 42, but then you guys always tell me that there's a different amount of people here. So, maybe? I don't know. Well, let's get back to it. Where did I leave you? Ali says, wait, did I miss one? I thought I saw something about Walnut Grove. Did I see this one about Walnut Grove? Did I miss it? Hey, Steve, what do you think of Walnut Grove townhome market right now? I have a listing in Walnut Grove townhomes. It is currently our busiest listings for showings. There's lots of buyers that want to be there. The only thing I would warn anybody about Walnut Grove, first of all, if you're moving to Walnut Grove, you move in, you never leave. That's what Walnut Grove, nobody ever leaves Walnut Grove. The schools are great. The community is great. But one thing I'll warn you, if you're a townhouse buyer or if you're a detached home buyer, most of Walnut Grove, we used to call it because you go there to die. Most of Walnut Grove is either 1990s houses, 80s houses, 90s houses, or the townhouses that are kind of late 90s, early 2000s. They didn't really have the style figured out yet. So, I think there's like Hunter's Run or a few of these different townhouse complexes where it's like the living room's upstairs and the bedrooms are in the basement. I don't know too many people that want to live like that. So when you look at these places, some of them are, 2 bedrooms on the main floor and then 1 bedroom in the basement, which is fine if you got a teenager. It's actually probably preferred. But a lot of people kind of aren't really used to that. And then they're also not going to be these open concepts that everybody is. So there's a lot more people that'll move to Willoughby. They'll deal with overcrowded schools because they want island kitchens and open concept and newer building and all that sort of stuff. So I don't blame them for it, but it's just a different style. It's always been desirable. You're always going to have a pretty good time selling in Walnut Grove. People will make it work because they want the area. So let's get back to that. What's your outlook for the market 5 to 10 years out? 5 years, don't know. 10 years. That's why I'm not selling my stuff. I'm actually looking at moving up within the next 1 to 5 myself, just because I see my personal home has come down, I want to say $100,000 at least in the last year, and the house I want to buy have come down 3. So I'm a big fan of that. I think we're going to likely, the big fight right now is on immigration, foreign workers, all that stuff. Economy gets bad enough, or economy gets good enough, you need workers again, that immigration faucet turns off and on real quick. So don't think that it's going to change anything. Don't think that it's going to be shut off forever. Are we going back to a consistent average of 5 to 7% up, or more like getting crazy again? Okay, so 2021, 2022, I guess 2020 we saw like 20%, 2021 we saw 40%, and then beginning of 2022 we saw like 20% again or something. So stupid. And then it fell off. The historical average, there's always somebody in the comments, oh, you dummy, you said it goes up 6% every year. That's not what I said. The historical average since they started tracking prices in the Fraser Valley in particular is about 6.6%. But way back in maybe 2 years ago on my channel, I did a video on this. It's not 6% per year. It's 6% annualized per year over 40 years. And the way that looks like is usually the actual numbers were something like 2 years sideways, 1 year stupid up, and then the next year back. Maybe. So it was like no gain or like a marginal gain, 15% down 3%. Right? So it was like this tick, 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 spike down a little bit. So the point of owning real estate is, one, you got to live somewhere, obviously. But two, if you miss the spikes, you're screwed. You're behind. So I was talking to a client yesterday that just said, they were retirees. They've retired up into the interior. And they're like, it's just real estate's never treated us poorly. And I'm like, yeah, it's just because guys, you weren't geniuses. And they kind of laughed. And, it's just because you got to own it. And that's what they did. They owned it. They owned it for many years and they paid it off. And every house they bought has gone up in value. So please don't be one of these guys that counts on 20% return. I just had somebody reach out to me. 20% returns in real estate investing. Disagree. Heart, heart, heart. Love you too. Love the hearts. The emojis are something new. It's like my daughter's learning to text and she sends me emojis and I have no idea what they mean because I'm not a cool kid these days. What area of Surrey has the best secondary schools? That's tough. I think probably South Surrey, Elgin are probably the best. I heard some scary things about my old school, Fleetwood, the other day. Tweedsmuir I'd like to avoid. And those are formerly the good ones. So I don't know. That being said, I'm biased. My kids go to private school. So schools are an issue these days. Don't ask me about teachers. I have my own mindset on teachers. Let me rephrase that. I have particular thoughts on teachers' unions, not teachers themselves. Don't usually catch you live, so special treat. It is a special treat for me while I dig into a project. Well, hey, thanks for having me on, Charity. Appreciate that. Susie! I love Susie. She's the best. What's the one biggest piece of advice you have for sellers regarding expectations in the marketplace? One big piece of advice. What's my one big piece of advice for sellers? I would probably lean towards the price is the price. Like, the market is the market. And I know you might want to say that, you need this much money. I've never once in my lifetime had a buyer come to me. I could never say this to a seller's face. I've never once had a buyer come to me and say, you know what? I really like the house. How much does a seller need, like, to pay off their car, to pay off to get the next place so they can buy their kids a down payment? Like, what do they really need? 200 grand over market value? Sure, no problem. It's never happened once ever. So the price is the price. You may not like the price. That doesn't mean it's not the price. If you're not sold, you are the highest bidder for your home. So in other words, congratulations, you own it. You are the one who sees the most value in it. So therefore, you're the one that gets to live there, and the buyer's not going to live there. Simple as that. So the market is the market. Goes up and down. I would say probably right now, if I was focusing on, okay, well, I want to move. You want to move, but I don't have to move. Okay, you don't have to move. So you're going to wait for your price. Okay, so then when you wait for your price, you need to go up 100 grand. The house I go to is also going to go up 100 grand or maybe more because I'm probably upsizing most of the time. So in that respect, make up the money on the other side. Like, unless the only time it really sucks is if you're an investor, you bought at the peak and you're getting out of the market completely. That's a hit. For me, let's use real numbers. So I bought my house for about $700,000. Peak of the market, one around the corner from me sold for $1,198,000. So 20,000 less than $1 million, or $2 million bucks. And now there was one 4 doors down from that sold for under 1.6, right? So it's a 20% decrease in price from the peak of the market. It sucks. It totally sucks. But my plan is to move up. So if I have to sell for, say, 1.6, maybe I sell for more because my house is better than that one. I'm going to make it up on the other side. And I still plan on owning a principal residence for, well, until I have to go into diapers in a retirement home. So I would assume for the long period of time, I'm going to make it up on the other side. I also want to live in an awesome house. Like, I'm not kind of done with my house, right? Like, I love it. It's awesome. We kind of outgrown it. So I'll make it up on the other side. I don't know if that answers your question, Susie, at all, but the market's the market. And if you get fixated on a certain price, you're gonna. Nobody moves because of the price. Nobody ever phones me and goes, I want to sell because I think right now is top dollar. They say, I'm going to sell because my kid wants to go to this school. I'm going to sell because I got a new job over here. I'm going to sell because we had another kid, and or I need something different, or I don't like my neighborhood anymore, or I want to be in this neighborhood, or I want to be close to family. Nobody goes, hey, I really want to sell now because I think I'm worth about $100,000 more than I was last year. I've never received that call once. So people move because they want to move, and then they try to. Now what they do in that manner is they calculate the wrong way. So, for instance, let's say my house is worth 1.6 right now. I say, well, maybe I can get 1.65. And so that's where I price my house. And then I look at the house and I'm looking at it and it's $2 million. Well, maybe I can get it for, it's a really good house. I know it's a good house. So maybe I can knock $100,000 off of that. So I can go from 1.65 up to 1.9. Not a bad deal. But then I end up putting my place on for 1.65. I have to reduce to 1.6. The market goes down further. I end up selling for 1.55. So $100,000 less. But then why do you think I liked that other house so much? Because it was priced well. And maybe it got full ask, or maybe it even went into multiple offers, which is still happening when people are priced aggressively. And maybe it sells for $25,000 more because it's so good. Very possible. So I've just done the math, hundreds of thousands of dollars in the wrong direction. And that's more realistic. That is exactly what most people do. So now when I come in and go, guys, that's not the real numbers, I'm the asshole. Sorry, don't swear on YouTube. I'm the jerk. And now, that realtor just wants a quick sale. Or I'm the impartial person there to help guide you through and tell you what's really going on. Could be that. Do I look stupid when I do this? I have like 6 chins. I just caught a glimpse of myself over here because I have to see myself on this screen. Okay, what else we got? So, Susie, I hope that answers your question. That was a long time on one question. This is way better than Frankfurt's lives. I agree. What is Frankfurt? Does he even do lives anymore? Are you starting to see rents leveling off? Do you still see a downward risk for Surrey townhomes, particularly Sullivan Station area? Great question, Carlos, because I was just doing an evaluation for a Sullivan Station area the other day. And I'll get in, it's kind of reflects to what I just said. Rents are going down. So currently I have a tenant who has just served notice to me. And I don't think I'm going to get the same amount of rents that I was before if I wanted to get it rented. The thing is, I don't necessarily want to get it rented. I may actually take it over for myself. We're not sure yet. But there's no way I'm getting rents that I would have had. So this tenant's been 1.5 years or 2 years, something like that. there's no way I'm getting those rents again. Just not going to happen. So I'm not seeing them level off. I'm seeing them continue to decrease. The really bad basement suites, like you guys know the ones I'm talking about if you've ever been looking for a basement suite or if you've ever been looking for comparables, the really bad basement suites are getting super cheap again. Like at one point when we went through all this foreign student craziness and they were packing 6 and 10 of these guys in a basement suite at any given time, they were renting single beds, not bedrooms, single beds for $600 a month. And they were renting bedrooms for $1,000. I saw a full basement suite. Now it's nowhere I would live, but it was a full basement suite to yourself. So one bed, maybe 500 square feet, bathroom, small little kitchen, living area for $1,000. And then okay stuff for $1,200, and the good basement suites are still $1,400. But basement suites at one point were getting $17. So they are definitely going down. As far as Sullivan, I like the area. My old partner used to live in the area. Partner at work. I'm married, so. She used to live in the area. She sold. I have family that lives in the area. The family that lives in the area is actually looking at staying in the area and just upsizing. But they had kind of a similar equation. So I went with them like how much your property came down versus how much the property you want to buy came down. And they're way better off in a bad market to move than they were in a good market to move. They would have been happy. They would have got way more for their house. They would have paid double the lift. Video about that coming out on my channel next week. Stay tuned. Click the like button. Nobody told me how many people are watching right now. I can't see that number for some reason. I think it's usually about 50 or 60 people at a time. I can't see that number right now. What else do I got? As a future home buyer, I hope prices go down, but I feel bad for people who overpaid. I mean, sure, if you're a home buyer, do you want prices to go down? Great, but prices have come down, and usually they're not down far enough for you to be happy because you think for some reason you're going to catch this upswing, and then you're going to buy in at the bottom, and then you're going to see things go up. People have never been happy with home prices. You can go on YouTube and you can find people from the 1970s, the 1960s, from the 1980s, all complaining that houses are unaffordable. That's our right as Canadians. We are complainers. That's what we do. So in that respect, if you're a future home buyer, just buy a home that suits your needs. Get into it. Set it, forget it, move on with your life, spend your time making money, going to work, having a family, enjoying your life. Don't enjoy your life too much. Work is actually the point of life, if you ask me, but some people disagree. What do they say? Life, liberty, and the pursuit of happiness. It's not having happiness. It's the pursuit of happiness that makes you happy. Having happiness when I'm happy, I'm cocktail in my hand, eating some French fries. So I don't think that's actually good for me. Thinking about saving up for that vacation, however, better than the vacation usually. My parents bought in 15 for $480 and somehow sold for 1.36 in 2023. Yeah. Or sorry, 1.36 in 2023. Yeah, that's not crazy. I've seen it. When I got in, I got into the market, I got into the market in 2005 myself for the first time as a first-time buyer. And then when I started selling real estate, really getting involved 2010, 2011, when I was really having good years, it was very common that we were selling, ranchers for $380. Areas like Birdland, North Surrey, that sort of thing. And those are all over $1 million now. So that's not crazy. If you had to pick one different area to live in the Lower Mainland, where would you move? I'm looking at it myself, and I'm not telling you because I don't want everybody to go there. But I am looking at maybe living the city for the first time in my life, possibly. We'll see. Or just a better part of the city, or just a different part of the city. You know what's really nice right now, which is kind of crazy to say, if you can afford it? East Van is way nicer than it used to be. Like, East Van is pretty good now. So if you can afford like a $2.5 million home, East Van's a pretty nice spot. I hear Squamish is banging right now. Like, I hear Squamish is the new Surrey of the rich people from West Vancouver. So, like, that commute's happening. Like, their kids are buying in Squamish and then commuting into town. So I hear Squamish is banging. It's the only place making money right now. Good question, though. I like that. Carlos, where would you move? Everyone, Maple Ridge. I'm going to move to Maple Ridge. Nah, don't do it. Definitely not Mission. I mean, if it wasn't for work, I would probably be. I spent some time up island few weeks ago. It was pretty tempting. Ooh, here's a nice one. Something about probate. My parents' house is in Probate. Not a city in the Lower Mainland, by the way. Bad real estate joke. It's really close to 22nd Station in New West. Should we wait to sell when probate is finished or keep it while it's paid off? I cannot give you advice about your own personal situation. Sorry. What I can do is tell you that it is a lot easier and less of a pain in the rear end to sell a home once probate has been achieved. Because I had one last year, maybe 2 years ago, whatever it was, and probate was just a disaster. We were told by the lawyer it was going to be 3 weeks, and it ended up being like 9 months. Just don't. I would say wait. And if you need help, hey, I do a lot of estates. I think I know probate and estates better than most people. Give me a shout. Book a call, right with me. Book a call. What is it? First link in the description at a time that works best for you. What is my catchphrase that I say? I don't know. Sneaky Pete, finally here. So Sneaky Pete always supports the channel. I've checked out his channel. I can't say I'm into vaporizers, but he always supports the channel. And I am an idiot, and I always miss shouting out Sneaky Pete. So, there you go, Sneaky Pete. Check if you're into vaping, and I am not a vape guy. Check out his channel. Always a supporter of this one. 60 says, Susie says 60 people, 59 people, 60 people. Hey, great. Can you imagine what it would be like if I just had 60 people, I'm on a soapbox and there's just 60 people and they're just asking me questions about real estate? This is way better than that. But it would be crazy. I think I had one of these where like 125 people were on one time. And I'm like, can you imagine that? 125 people in the room? It's basically the same thing, except everybody gets to be with no pants here. Is North Cowichan, Vancouver Island, a good place to invest? I don't know. It's not my marketplace. I would not be looking at it for any. So I don't look anywhere out of metro areas for investment because they don't see the same growth. They don't see the same blah, blah, blah. They're low price. So you think they're going to be a good investment and they don't grow in value. If I had to pick a place on the island to invest that I thought there was going to see growth or whatever, I'd probably pick Campbell River just because it's still so low priced in comparison to everything else. And when I go here, does it get quieter? I think it goes quieter. Yeah, up island. Up island's nice. Down island just feels like more Vancouver with slower drivers and white hair. Q-tips everywhere. White hair, white shoes. Household income versus house price is actually broken. Yeah, okay. Sure. Nothing, I don't know how many times I have to scream it from the rooftops. Income to home price has zero value in assessing real estate. That's assuming that only people with incomes are putting no debt are bringing no equity. They don't have other means. It's just not real. So, for instance, 30% of 30% of people don't own a home, right? And when 30% of people don't own a home, you have to discount, I would say then, those 30% of people outside of house prices. So, I don't know. Doesn't really, yeah. It would be nice in a perfect world. incomes would be in line with house prices, and my weight would be in line with BMI. But it doesn't mean it's reality. We could be full of shoulds, right? We're sitting here shoulding all over each other, and it doesn't mean it's real life. Real life is real life. Should be's are for communism and socialists. $380 to over $1 million in less than 15 years is not crazy. No, it's not crazy. How many cash transactions? There's a good question. How many? I'm assuming what you mean is how many of your transactions that you're doing maybe on a yearly basis are cash, like physically cash. I would say the only time we have a cash buyer is when they sell their current house, which is probably like downsizers is what I'm trying to say. So you end up with somebody who, paid $200,000, now it's worth 1.3, whatever the example was before. The house is paid off. They downsize. That's a cash buy. They don't need a mortgage. But those are the only ones. There's nobody coming in with just all cash. Hey, I got cash. I'm going to buy. Actually, last 2 years ago? 2 years ago, I had somebody that bought cash. I don't know how he ended up with that much money, but a guy from another part of Canada, been here, his whole life, and he ended up with cash. But almost none. There's no cash buyers, really. When they say cash offer, they mean subject free offer. They don't mean cash offer. They mean subject free. Sneaky Pete, there you are. I already got to you. Appreciate the content. Thank you, Sneaky Pete. Hello, Michael. How's it going? It's going good. The mic is fine. Thank you for letting me know. We're getting close to the end here. Maybe I got to wrap it up. If there's not a bunch more questions, maybe I should pop back into the stats here and show you guys a few more things. We'll take a look at that. Port Coquitlam. That's my guess on where you want to move. No. Poco. No. People that live in Poco seem to love Poco. I don't like Poco. Particularly downtown Poco. Not where I would want to live at all. I think I'm biased because, man, Poco was downtown leaky condos central for a long time. I'm not a big fan of Poco. Lots of people want to go to Port Moody. It's very small. It's very expensive. Lots of people, actually, Coquitlam Center's become very popular. Extremely popular, actually. So lots of that. When I get a phone call, it's usually like, hey, I'm thinking about New West or Poco. And then when they realize prices, conditions, everything, a lot of people jump the river and come this way. New West seems to be where everybody wants to go to. And then it's like, same thing. They go check it out and they're like, do I want to live in a 55-year-old building? I personally don't. Lots of people do. What happens when 3 houses on sale side by side? I don't know. They either sell or they don't. Burnaby. No, I don't want to be in Burnaby. Do I think the Bank of Canada will cut rates next week? Yes, I think they will. No, I don't think they should. Their mandate, so the Bank of Canada's mandate is to keep inflation low, and that is their only mandate. And they should not be thinking about stimulating the economy if inflation is still high. But I think, the federal government the Fed in the States, they have a double mandate. They have keep inflation low and keep maximum employment. We have and keep inflation low. So they shouldn't be factoring employment into their mandate because it's not what they're there to do. So I think they will. I don't think they should. D. Trent lives on the island. Okay. I think I knew that. D. Trent is also a 16-year-old girl. How long do you expect the condo crash to continue? I mean, it's the everything crash here, if you want to call it that. Let's get back into the desktop for a minute. So this was, again, number of sales, annualized and detached. Let's do the same thing now. Here, let's look at it for apartments. So just so everybody understands, if you weren't here earlier, what the numbers are that you're looking at. So this is a 12-month rolling average of the number of sales over the last 20 years. So this isn't a given month. This is the 12 months, or the 12 months previous to that month average by the time you got to that month, if that makes sense. And that's why we've seen such a, like, so low. But when you look at like townhome averages, they're not that much off. Like okay, so townhouses is green, 3,300, like 3,600 back in the day after the financial crisis, 2,300. Then we got 2,500 in like 2013. Just before 2019, we were at 3,500, and now we're at 3,300. So like 2019, like, so the townhouse market is not actually that much worse than it was 6 years ago. It is, but not that much in transaction volume. Condos are actually better. Maybe they're right around there. But like, look at this condo market. Like, look at the number of sales in this condo market from, I mean, here's 2008, 2009 financial crisis. And then look at this dip, this low, terrible, low, crappy dip, the red line. I mean, those numbers were 2,100. Right now, we're still at 3,800. So where's the crash here? The crash would be in detached home sales, but there's a lot less detached homes as well. So pre-sale condos, though, let's go all property types. Pre-sale condos in an area like Toronto are definitely, but I mean, they were speculation anyway. They were buying futures contracts. They were stupid. I've never recommended someone to buy. I've had clients buy them. I've had clients that insist in buying them. And I've had clients that have bought some good buys. But it's not like, hey, let's try and flip some paper. Let's try and do this condo thing. That's not, no. I try and discourage that as much as possible. So this is the overall market. That being said, let's go ahead and take that off and look at prices. I mean, it's no... Are you seeing this crazy, like, this was the crash? This is the continued decline. So the question is, how long does it go? Don't know. I would prepare myself for a smoothing out at some point. Like, the down will stop, and then we'll go kind of sideways, and we'll kind of, like, if you actually look at these last 3 years, the big swings haven't actually been that much. So I think we're going to see a lot of that. But that happens all of the time. Look at this. So you see this big run up, and then you end this down like this. Oh, you know what else I can show you? This isn't a good way to explain this. Let me show you here. So this is kind of tough to see, and I should probably go back in time and find one that's more compressed. But this is the detached home prices in the Fraser Valley. Historically, since they started tracking them in 1979. Okay, so this is as far back as we can possibly go. Just saw James Ruffle pop in here. So, hi, James. Okay, so what happened? When you had a massive run-up, like the run-up that we had in 2021 was not that uncommon from 1981. It's just that little squeaky thing down there now. Even though when you're like watching, like, here's the size of Earth, and then they go, here's the size of Jupiter, here's the size of the sun, and they do those videos where it's like, here's the next biggest star, and then you can't even see the one down there anymore. The Earth, a little pin drop over there. That's what this is like. But that was a big run up. And then 1981, 1982 crashed, and then it continued to basically, it took till 1983-ish for it to come out in the wash. And then those prices continued completely flat until about 87. Then you saw a mild recovery. And then till 89, you saw prices about come back. And then 2 years later, they were almost double what they were. So you saw the same thing. So then you saw a little bit of a crash. You saw a run up. And then you saw it go sideways for so long. And there's some big dips in here. Then you saw the 03, 04, 05, 06 run up, and then you saw the financial crisis and a turn back. Now, you would have seen a bigger turn back here if this was a condo chart. They don't actually do this, unfortunately, this for condos, this chart. But this was actually more of like a dip and a long dip. And then it actually didn't recover until after 2015. So detached market here went up in 2015. The condo market actually didn't take off till 2017, till this kind of second run up. So I expect we'll see something very similar to that again in the future. That's what I think we're going to see. I think we're going to see muted. I don't think we're going to see massive big corrections from here. I think the big corrections have happened. We'll probably see downward pressure continually now for the next while till economic happiness returns, if you want to call it that. And then things will go on, and eventually everybody's going to hate it. Things are going to go good. Like the economy gets good again. Eventually. We don't know when. Man, I talk a lot. Okay, I'm going to try and wrap it up here. Get a few more questions in if you have them. While you type your questions in, I'm going to read more questions, and I'm also going to have my afternoon protein shake. I need like some intermission music, like some Jeopardy music or something. Now factor in annual inflation. Things are weighed down with that factored in. Yeah, okay, so you're right. You add inflation on. I don't know. I don't think anybody thinks in real numbers this or in real numbers that, because you know what that argument wasn't? When real estate was going up 40% in 2021, nobody was like, well, annualized returns, this is a way better investment than gold. Nobody was saying that stuff, right? So yeah, you can try and outsmart the market. Good luck. Market is what the market is. What do we say? If that's a stock, you could totally see the next stop be 2019 prices. Why? Makes no sense. Man, if people don't like the real estate market being inflated, how about that stock market these days? Oh no, it's the S&P. Yeah, okay. I had a thought this morning, the S&P and stuff. So many people have so much access to stocks now that it's crazy. I view them as, I own a lot of stocks and investments, but I view it as a very big bubble-ish type market. Or maybe it's just the growth, because I was sitting there and I'm like looking at my portfolio this morning. And it's like, 30 years ago, I wouldn't have been able to look at my portfolio probably online at all. I get a statement in the mail. And if I had an extra $6 available, or if I had an extra $100 available, I couldn't buy the S&P, or I couldn't buy VUN or an index fund on my phone while I'm taking a dump. Like, you couldn't do it. So just the amount of people that are buying into it more and more and more just for the sake of buying into it because it's a good investment, because it grows. You want to talk speculation? Not saying it's wrong. I'm not saying you're stupid if you're not in it. Dumb Money and James Rothwell are having a love affair here in the comments. At some point, condo prices will make sense for investors. Probably true, but they never made sense when they were buying them. And people thought they made sense. Thanks, James, for playing the music. Any signs of recovery at all? Recovery to what? Tell me what you want recovery for. Prices stop going down, prices to start come back up, or peak prices of 2022. Because there's no signs of those. That's the way a stock moves. I think that's the way stocks like Tesla move. I think that's the way stocks like Nvidia move. I don't necessarily think that's how certain stocks move. But maybe. Who knows? I don't know. All right, and Dumb Money's back in the comments. Okay, cool. Well, I think I am going to wrap up here. Make sure to click the like button. Has anybody shared a video? Have you told a friend about Karrasch Real Properties channel, or Have you told them about the Tom Story show and the amazingly good-looking co-host of that show? Please do so. I would absolutely love it. I appreciate everybody that's been here. And yeah, I think that's it. The market is not as terrible. You can get sold if you want to, unless you bought in 2022. That's about what it wraps up to. Have a great day.